Everyone, welcome back to G-Tech Finance. So there's always this problem we ask. You know why everyone isn't able to beat the market? Because they're paper-handed sissies, not diamond-handed sissies. So I got some proof here. Why, if you follow a strategy like that, like what Cathie Wood just said, in diamond handing over at ARK Invest, you're probably much better off first. But before I show you what I want to show you, it's really useful to remember this. When a stock goes up in price, it's actually increasing in risk. When you see, oh, it's up 10%, oh, it's up 10%, oh, it's up 10%, that is getting riskier and riskier and riskier. Every single move up is an increase in risk. It's not what we think it is. What we initially think when we see, oh, it's up 10%, well, it's trending up. It might be a move upwards. It's momentum driven. Yay! We get this feeling that, oh, safety and momentum. There's safety in being in the middle of the sheep farm, right? Because you're in the middle, like the dog's not gonna eat you. The sheep herder is not gonna come kill you. You're in the middle. It's like, let's just go this way. Oh, why not that way? Or just go over there. So when you see green in the stock market, it's human nature for us to feel like, oh, well, things are getting better. Yeah, let's go over. Let's go here. Let's go over here. Let's go over there. Everybody's going. This is fun. Yeah, we're going this way. Now, great. When things are red, that is when there's pain in the market. Obviously, we've talked on this channel before about how, first of all, the flight sets and we can fight stock prices falling because that's our only option as humans. We don't like being backed up against the corner, continuously getting punched in the gut over and over again. It's like, just sell, make the pain stop. It's totally a human nature, an issue in psychology when it comes to investing, to want to sell when those times are happening. But what's actually happening is every punch to your gut, it's like your portfolio just got less risky, less risky, less risky. That doesn't jive. Like, if they were handing you flowers, your portfolio is less likely to decline even further every time the market was ready to be like, oh, okay. If you have any kind of margin outstanding, it's like, oh gosh, I keep getting closer and closer and closer to my margin call, right? Your margin calls, if you have margin outstanding, and so psychologically it feels like, oh crap, getting dangerous more and more. It feels like things are getting more and more risky, but in reality, the pressure, the amount of pain that you need, or the amount of energy that you need to get closer and closer to a margin, or closer and closer, is a fall. It's harder and harder at every stage because you're de-risking your portfolio. Here's just an extreme example. If Tesla today, just to make this simple, I'm going to show you some graphics here. Tesla today was $1,500 a share. It dropped down, say 75%. Well, let's do the math here. So 1,500 times 0. So, okay, that's $375 a share. I think a lot of people would look at Tesla historically just over this last year and year after the split and say there was a lot of support for Tesla between 375 and 380, maybe 420, in that range. And so I think if Tesla were 1,500 today, a lot of folks would say, yeah, I mean, sure, it could go to the last support level, 375. That's a long way to go, but it could happen. And it's somewhat what Cathie Wood said yesterday, like, they have a lot of confidence in Tesla, they have a lot of support, so it's possible. Today, let's say Tesla's like 550. Minus 75%, it will bring down the price to $137 a share. I think that a lot of us would say, probably not as much of a likelihood of that happening. It would take a lot more pain in the market to see that kind of collapse, going from 550 to 137. Then it'll run up to 1,500 and then fall back to 375. That would be much more likely, in my opinion. So in other words, again, it's my opinion here. A lot of people think Tesla is very high valuation. Let's just see Tesla as an example. In my opinion, Tesla goes up to 1,500. It's much more capable of falling down to 375 than it is from 550 to 137. Not very likely, in my opinion, because anytime we fall more and more, people say valuation in line. In my opinion, let's go buy it. At least the savvy investors are saying that. But what do most people do in the marketplace? Well, an easy example or an easy way to figure out what most people do is just go ahead and look at ARK Invest. So let's say this works. There are these green lines, and so right here on the left side of my ARK, you can see that was somewhere around August, so of 2020. The red lines mean money is flowing out of ARK Invest. So people are withdrawing their money from the fund. So take a look at this notice, this weird pattern. We have at ARK Invest. So this red arrow here, that actually right here. So when people are withdrawing their money from ARK Invest, arrow number 1 is right here at the beginning of September, which happens to be right after Tesla split. We started having our September crash, so we started seeing money flow out of ARK Invest during the beginning of September. The arrow number 2 shows us we had an outflow right around maybe day 10 in November, so around November 10th, another large outflow right around here. Number 3, the end of December. And then we've got the end of January, and then the end of February. This is where we're getting these outflows. So again, just to remember, the beginning of September, about 10 days into November, end of December, and January and February. Pretty easy. Well, this is Tesla's stock price. Beginning of September goes down. Tesla stock price around, a week to 10 days into November goes down. And Tesla stock price end of December goes down. Tesla stock price end of January goes down. End of February still goes down. And at every single point. So Tesla stock went down. People took their money out of ARK Invest, even though Tesla is becoming less risky. So society follows the sheep mentality of, oh my gosh, it's red, let's sell and get out. Now, in general, there are always going to be, those commenters that are like, oh, well, that's because you sell when it starts falling, then once it gets to the bottom, you buy back. Fine, go make a YouTube channel, start publicly disclosing all your trades so we could see how you perfectly time the market. Fine. Okay, do it. I would love to see it, and I want you to succeed. I really want you to, but the point is, the massive amount of, the greater society that is investing into exchange traded funds pulls money out of funds dramatically. Look at this massive outflow we got in ARK. End of February, we almost had $400 million flow out of ARK Invest in one day. One freaking day, $400 million put out of ARK Invest, and it always seems to line up exactly with when Tesla stock is going down. And this is literally people going, oh my gosh, the price is going down. Let's take our money out while the stock is de-risking. This is literally the time to be putting money in because these stocks de-risked. In fact, watch this. Let's reverse the analogy here for a second. Let's only buy or confess when things are red. Well, obviously, this has segment we're in, so we can't really look at February yet because we haven't had the recovery yet. But let's look at the prior times. Say you bought ARK Invest around this first week of September, somewhere around the first to second week of November, end of December, and end of January. Let's say you bought into ARK Invest at those points. Well, that means you would have bought into ARK Invest somewhere around the bottoms of Tesla's price. And you would have averaged into the periods of time where Tesla ended up performing better afterwards again, like obviously our sell-off over here brings us back to a prior level. But the point is, if you did the opposite of what the masses did, you would have ended up be still on a substantial ride upwards from November by buying at the low every time. So you could literally look at, for as an example here, ARK Invest fund, and just do the opposite of what the masses are doing and buying when people are selling, and out of ARK Invest by following or doing the opposite of fund flows. Now again, we obviously expect Tesla to go up again, and then we can update this, sort of breakdown here. But take a look at this. The other opposite thing to do is I looked at some of the peak inflows and I marked those in green. So let's use the blue circle here, and this is about the 1st January, about the first day of March, where both of these were pretty green days. The first trading day in March, I'm pretty sure whatever the first Monday was pretty dang green. The market actually opened up very, very optimistic. And what's ironic about that is in each of those examples, you would have ended up buying right at a particular peak before it sold off in the short term. Now overall, my goal isn't to encourage people to try to time the market. That's not at all what I want, because otherwise you lose loads of money. But it's fascinating if you look at Cathie Wood's ARK Invest, outflows and inflows. People are dumping ARK Invest right when it's becoming the least risky, and people are plowing in when it's the most risky. Just to sort of nail this point, think about this. Look at where the biggest, thickest charts are. In October or November, where prices were relatively low compared to where they are now. Now the biggest inflows were after Cathie Wood's fund had, plus 5%, plus 5%, plus 5% every day after day after day after day in December and January. That's where the biggest inflows were, when euphoria was at all-time highs. Oh, can't lose money in the market, with the exception of those periods of time at the end of the month where, oh, it fell, that's it, let's sell out. Following the trend, in my opinion, when it comes to investing, unless you're doing like momentum swing trades, but you have to be really deliberate about those, calculated, and have a lot of research and information about those. You have to have more information on the market to really succeed on those, which is possible to do. So the market can be incredibly inefficient, which does surprise a lot of people. You'll be really, really careful with investing when everything is green, or is everything in the market right now bloody red, which is a sign that sure, can prices keep going down? Maybe. But remember what happens when prices go down. You are de-risking, all right. Okay, right folks, I think that's it for today. If you enjoyed the video, hit the like button, subscribe to the channel if you haven't already, and hope to see you guys next time.